Tax registration for a non-resident. This article explains the special rules and conditions under which non-resident persons, meaning individuals or businesses without a place of residence in the UAE, may be required to register for VAT in the UAE. The rules are designed to ensure that non-residents conducting taxable activities in the UAE are properly registered and accounted for, while also avoiding unnecessary or duplicate registrations when VAT can be handled by UAE-based parties instead. 1. Overview of tax registration requirements for non-residents. Explanation. In the UAE VAT system, a non-resident person, whether an individual or a company, may be required to register for VAT if they engage in taxable supplies within the UAE. This means that even if the non-resident has no physical place of business in the UAE, they could still have to register if they are involved in taxable activities occurring within the UAE's borders. Key points. No place of residence required. A non-resident does not need to have a physical presence such as an office or warehouse in the UAE in order to be required to register for VAT. Taxable supplies trigger registration. As long as the non-resident is making taxable supplies in the UAE, they may fall within the mandatory registration requirements. Special rules for imports. However, special exclusion rules apply when the non-resident is only importing goods or services into the UAE. These cases do not always require registration, thanks to the reverse charge mechanism, RCM. 2. Exclusion of imported goods and services in registration threshold calculation. Explanation. When determining if a non-resident person has exceeded the mandatory registration threshold or voluntary registration threshold that applies under UAE VAT law, certain imports are excluded from this calculation. Imports excluded from registration threshold calculation. The value of goods and services imported into the UAE by the non-resident does not count toward the non-resident's taxable turnover if the following condition applies. A UAE-based importer, a UAE resident business, is responsible for accounting for and paying VAT on the import under the reverse charge mechanism, RCM. Explanation in simple terms. When a non-resident exports goods or services into the UAE, a UAE-registered importer may take on the VAT liability. In such cases, the non-resident does not have to register for VAT themselves, unless they have other direct taxable activities in the UAE. This ensures that the same transaction is not taxed twice. The UAE importer handles the VAT, and the non-resident's import turnover is excluded from the registration threshold calculation. Why use the reverse charge mechanism, RCM? Under the RCM, the UAE importer declares the import VAT directly in their VAT return. The non-resident does not need to collect, file, or account for VAT directly. This simplifies compliance and ensures VAT is paid at the point of entry into the UAE's tax system. 3. Purpose of this rule. Explanation. This exclusion serves an important purpose in the UAE's VAT framework. Why this rule exists? Avoids double registration. Non-residents would otherwise have to register even if they had no physical presence and only sold to UAE businesses already handling the VAT. Prevents unnecessary administrative burden. Without this rule, non-residents would need to register for VAT just because they ship goods into the UAE, even when VAT is already handled by the UAE importer. Focuses on direct supplies. The rule makes sure non-residents only register if they are directly selling or supplying to UAE consumers, where no one else is handling VAT on their behalf. Example scenario. A non-resident company in Germany sells industrial equipment to a UAE company. The UAE company imports the equipment, and under the reverse charge mechanism, the UAE company declares the import VAT in their own VAT return. Pays the VAT directly to the FTA, or recovers it if eligible. In this case, The German company's sales do not count towards its UAEVAT registration threshold. 4. When non-residents still need to register for VAT. Explanation. Even with these exclusions, a non-resident person must still register for VAT if they make taxable supplies directly within the UAE, and no UAE party is responsible for accounting for the VAT under the reverse charge mechanism. Situations where non-residents must register directly. Direct supply of services to non-registered consumers, B2C. If a non-resident directly provides services to a final consumer, who is not VAT registered, the non-resident must register for VAT because there is no UAE party to account for VAT on their behalf. Direct supply of goods into the UAE market. If a non-resident sells goods directly to consumers in the UAE, and not to VAT-registered businesses acting as importers, the non-resident must handle VAT themselves. Registration is required. Examples of direct supply. A non-resident consultant provides design services directly to private individuals in the UAE. Registration required. A non-resident online retailer sells products directly to UAE customers. Registration required if sales exceed the threshold. For more details, contact us.